Do you invest in stocks?
If you do, then you need to understand cash from investing activities. In my previous video, I talked about cash from operating activities, and in the video before that, I talked about the cash flow statement. You may want to watch those before you watch this video. Alright, so what is cash from investing activities? Cash flow from investing activities is the section of the company's cash flow statement that displays how much money has been used in, or generated from, investments during a time period. It's the cash the company has spent on and received from its investments. Investing activities include purchases of long-term assets, such as property, plant and equipment, acquisitions of other businesses, and investments in marketable securities, such as stocks and bonds. Purchase of property, plant and equipment, sometimes called capital expenditure or CapEx, is the cash spent on things such as land, buildings, machinery, servers, office equipment, and the like. When a company purchases property, plant and equipment, it will be a negative number on the cash flow statement. When a company sells property, plant and equipment, it will be a positive number. There are two types of capital expenditures, but they are rarely broken down for us on the cash flow statement. The first type is maintenance capital expenditure. This is the cash spent to maintain the company's property, plant and equipment. Let's say you own a construction company, and in order to operate, you have a bulldozer. The bulldozer starts to break down daily, so you decide to replace it. You spend $250,000 on a new bulldozer. That $250,000 would be part of maintenance capital expenditure because you are simply maintaining your current operations. The second type is growth capital expenditure. Let's say you decide to buy a second bulldozer for $250,000 so that you can work two jobs at the same time. That $250,000 would be growth capital expenditure because it is used to grow your business. Sometimes a company will decide to buy another business. This is called an acquisition. In 2023, Microsoft acquired Activision Blizzard for $68.7 billion. The cash spent acquiring other businesses will be a negative number. Sometimes a company will decide to sell a business. When this happens, the cash they receive from the sale will be a positive number. If a company has excess cash, it may decide to purchase shares or bonds in other companies or the government. When a company purchases shares or bonds, it will be a negative number. When a company sells shares or bonds, or if the bond matures, it will be a positive number. If we sum up all the items, we get the cash from or used in investing activities. Generally speaking, cash from or used in investing activities should be a negative number because a company should be making investments. A company that is growing will be making investments in property, plant and equipment so that it can continue to grow in the future. Let's take a look at Nike's cash flow statement. Here we have Nike's cash flow statement for the year ending 31 May 2023. Here we have the cash provided or used by investing activities. First, we have purchase of short-term investments. Short-term investments are assets that can be converted into cash within a short time frame, typically within 1 to 3 years. Examples of short-term investments include short-term bonds, treasury bills, and other money market funds. In FY23, Nike purchased $6 billion in short-term investments. Next, we have maturities of short-term investments. Short-term investments will mature after a period. When they mature, you get your investment back. In FY23, Nike received $3.3 billion from its short-term investments maturing. Next, we have sales from short-term investments. Just like a company can purchase short-term investments, they can sell them. In FY23, Nike received $4 billion in sales of short-term investments. Next, we have a key item, additions to property, plant and equipment. This is Nike's capital expenditure. In FY23, Nike spent $969 million on capital expenditure. The last item is other investing activities, which is a catch-all bucket for investing activities that do not fit into the previous items. In FY23, Nike had a cash inflow of $52 million from other investing activities. If we add up all these items, we get a net cash inflow of $564 million from investing activities. The most important item found in the investing activities section is capital expenditure. It's the most important item because capital expenditure is used to calculate free cash flow, and free cash flow is often used when valuing companies. To calculate free cash flow, we simply subtract capital expenditure from operating cash flow. In FY23, Nike had operating cash flows of $5.841 billion. Subtract the $969 million in capital expenditure and you get free cash flow of $4.872 billion. That $4.872 billion is cash the company can choose to disperse in any way that it likes, such as buying back shares, paying dividends, reinvesting back into itself, acquiring other businesses, or paying off debt. In the next lesson, we will be finishing up the cash flow statement with financing cash flows. To get notified when that video is out, hit the subscribe button. Let's summarize. Cash from investing activities shows the cash the company has spent on investments and the cash it received from selling its investments during a period of time. Investing activities include purchases of long-term assets such as property, plant and equipment, acquisitions of other businesses, and investments in marketable securities. When a company receives cash from investments, it will be a positive number. When a company pays cash for investments, it will be a negative number. The most important number on the cash from investing activities section is purchase of property, plant and equipment, also called capital expenditure, because it is used to calculate free cash flow. And free cash flow is often used to value a company. For more videos on investing, follow Value Theory or go to valueinvestoracademy.com.